Good morning, everyone. Jesse Webb, TradersPro. Market conditions haven't changed. Still in this bearish state, bearish in a bear market, and still looking at this sentiment right here. This is still a problem, and breadth has now moved down to about 39, which essentially means that 60% of S&P 500 stocks are trading below their 50-day moving average, so the majority are trending lower. Obviously, that is what the market is just a group of stocks and following the averages of a group of stocks. So there are various indicators that are covering that, but that's essentially the idea, is that when the bulk of stocks are moving higher, something like this, you would anticipate pretty strong movement. This has been a really interesting move back through here because we're just seeing just a lot of strange things that that feel like just this real pent up potential for a strong move one direction or the other. That's still kind of where we're at right here. Just a lot of volatility. We haven't seen this kind of move in this breadth for quite some time in terms of real sharp sell-offs and real sharp moves. Just a lot of volatility right here. So a lot of times when there's just a lot of uncertainty, you're going to get a lot of just strange market movement, and that seems to be what's happening right here, which is a cautious stance. We need to be in a cautious stance. We definitely need to be in a bearish stance still. Not seeing a lot that is bullish right here. The only thing that is potentially bullish is that we are almost extreme to the downside here on S&P sentiment and really Nasdaq sentiment, which are our tech stocks, have reached that level. They haven't reached this oversold level in quite some time. So we could see a bounce right here, but remember that markets and stocks can stay oversold and overbought for a length of time. Doesn't necessarily mean once it hits an area it's going to bounce, but we're in that location. We're in a I apologize for that. Got this frog in my throat. Can't seem to get rid of the last few months here. We've got this support area, not support, but this break even area right here, and this. You can glance at this buy-sell ratio and say, what's my bias? Well, we already know our directional alerts bias. Our long-term trend is bear market. Shorter-term trend, we can say, yes, it's still bearish. I need to have that bearish stance. Nothing has changed as far as that's concerned. So you've got several different confluence type indicators to be able to utilize. One of the other things to look at here that I like to look at is when you go here to sectors and you click on this sector ETF, you can scan this by week and kind of see what's been moving recently. And this is an interesting perspective. So utilities, we're seeing that utilities has had this counter trend back up. It had been moving higher. You can kind of see along this trend line. That trend line was broken, and now we're right at this support area. Break down, counter trend up, and now you've got some resistance. It was support, now it's resistance, and you have this one bar that has moved lower inside of this hold range. When we get a trend profile that looks like this, where it's that colorful mess and it's stuck in this hold range, then that's obviously some confusion. It's obviously a trendless market. It is yet to develop a trend at this point, and it's something to be watching for, not necessarily reacting to quite yet. Now, if I move to that next stock here, if I move to, or these are ETFs. Okay, if I move to that next one, which I'd scan by, would I scan it by week? Finance. So this one, now you can see these financial ETFs, IYF, and there is a pretty clear bearish profile. So same type of pattern. It's just a little bit deeper into that move where we're looking at a potential counter trend right here. So that's a quick way to be able to just visually glance and say, am I interested? What should I be interested in terms of bias? Well, you know that I don't want to necessarily fight this trend yet, okay, and try and pick an upside. It's just not giving me that. It's just not giving me that clue yet. It's just trending lower. I don't want to try and fight everyone else if everyone else is heading for the doors on this. So a couple ways to be able to utilize that, both the downside and the upside. When you see that bullish pattern, if I go to a new buy stock, this is not a great example. Let's see if I can find a little better example, because that's extreme. This is a little bit better right here. Now you've got a bullish profile. You can glance at that, quickly say, what should my bias be? Well, my bias is, yes, it's a bear market, but this stock is working in a bear market, so I may have an opportunity here. Maybe I don't put on a full position. Maybe I put a little bit smaller position. Maybe I don't put a position at all on, because it is a bear market and I don't want to be buying aggressively until that turns to a bull market. That means you're going to be sitting on the sidelines for a length of time. Nobody likes to do that, right? So we'll try to be able to take advantage of what we've got when it's here, and that's kind of the whole point of trading and investing, is you just have to take advantage of what you have in front of you, and there's a tool for you to be able to utilize that in TradersPro. So utilizing sectors, looking to see what's happening. If we go to SPY, SPY is also still setting up. Oops. Fat fingered that one, sorry. Here we go. And then we've got this back into this extreme range. Kind of looked like that that financial ETF type pattern, where it hasn't retested the resistance area quite yet, but we had a pretty decent down day yesterday, and that just could be that continuation. So once it dips over into here, then it'll look like, you know, something like yesterday, where it'll eventually maybe continue lower and then pause back up and then come back lower. It's going to go back and forth as long as that trend is inside of this range on SPY. Then we can use that as additional confirmation for our overall bias for the trend direction. Muscle stocks this today, PDSB had a big breakout, 23% on this move. Once it reaches this area, you know, sometimes if we look at like a stock like 9, which we've talked about before, which had that big breakout a few days ago and then retraced, you can see it was all the way up here 2 days ago, but now it's worked itself back and pulled back. It's still in a buy range, still in a buy zone. Anything up above this green line is in that buy zone, but once it pulls back, once it gets up into this extreme, this is typically what it looks like. You get a real sharp move up and then a couple 2 or 3 days back down. Maybe something like this, maybe something like this. These can actually become great locations or areas for buying. If you see that and you see a stock that has moved up to extreme and then it's starting to pull itself back inside that extreme, then those are the locations to buy within an uptrend. So you can utilize that as well. Let's look through a couple of other these stocks. And PTSB, nice breakout. Let me refresh this actually, and we'll go to the new buys here. ELF, which is also looking like it's got a decent potential for a breakout, and SJI, which is a utility type stock, kind of rounding out the top 3. If you don't have full access to the TradersPro software, you can sign up below, and we look forward to having you. Have a great day today.